Hi guys, can you hear me? If you can hear me, please write yes in the chats. Hi everyone, can you hear me? Please write yes in the chat so you can hear me. Okay, so let's start today's session. Today's session is going to be a little interesting one because today we are going to learn fundamental analysis. Okay, today we are going to learn fundamental analysis. Let's start today's session, everyone. Okay, just a second. Hi Shikha ma'am, hi Darasha, hi Akash, hi Johnny, hi Lishman, Rao Kona. Hi everyone, how you guys are doing up? Okay, so I hope you can watch my screen right now, right? Let's start. This is an English class, completely English class. So yeah, we'll go with the basics of fundamental analysis today. And okay, so guys, what actually is fundamental analysis? What actually is fundamental analysis? Fundamental analysis FA is a method of measuring securities' intrinsic value by examining related economic and financial factors. Okay, by examining related economic and financial factors. So, what actually is fundamental analysis? Here we see the economic conditions, okay, the financial factors like the profit, loss, and with the profit loss comes, the more categories like, P ratio, price to book ratio, the long term gains, the short term gains, everything you can imagine of, each and everything that you can imagine. Fundamental analysts study anything that can affect the security's value. So, for example, if you think that the stock can go up with XYZ reason, then you have to check out that XYZ reason. From macroeconomic factors such as the state of economy, industry conditions, to microeconomic factors like effectiveness of the company and management. You have to check each and everything, and that's why it is called fundamental analysis. The end goal here is to arrive at a number that an investor can compare with. So, for example, the end goal here is to arrive with a number. So, for example, if I say, like, I want to buy a Tata Power stock, now I have to have an end goal that this is the best price to buy it. Okay, this is the best price to buy it. And if the security's current prices, in order to see whether the security is undervalued or overvalued, you can just check it out. With the fundamental analysis, you'll learn about what is undervalued, what is overvalued, when to buy, when to sell. This method of stock analysis is considered to be in contrast to technical analysis. Okay. So basically, you are also doing technical analysis, but you're also going to the fundamentals. Okay. And if in easy words, it is quantitative analysis or qualitative analysis. I hope it is clear to everyone the fundamental analysis ka definition. In case this whole stuff is still not clear to you, just understand we are going to deep down check the stock, everything about the stock you can see. So, for example, there's a company about known as Zomato. We have to check everything what's happening in Zomato. What is the loan? What is the profit? What is the total number of sales? How many staff are there? Are the staff getting a regular pay? What is the P ratio, PV ratio, cash flow, stock splits, dividends, bonus? Loads and tons of content in fundamental analysis. So you have to just check it in the macroeconomic or microeconomic. Both macro and microeconomic factors will play here. Now let's learn about quantitative analysis. What is quantitative analysis? It is balance sheet, P&L, cash flow. Balance sheet is where company statement financial position reveals like what is the company liabilities, what is the income statement, cash flow, and everything. P&L analysis, the company's balance sheet will reveal that, yep, this company is earning 10,000 bucks. Yeah, the company has a cash flow of 50,000 rupees every month. Everything. Cash flow analysis is completely going to dump the cash flow. that yep, if this company has a main source of income 10,000 and other sources of income, which is by somehow marketing on XYZ, which is 5,000 rupees. So all the sources of cash flows are listed over here. Then, guys, there comes the basic pyramid of fundamental analysis. Now, let's go one by one. I'll ask a question. This is known as economy, right? This is known as economy. Answer me, is it the good time to invest in Sri Lanka's economy, or is the good time to invest in you can say Indian economy? Tell me. And Johnny, these questions please ask in Discord as this is not relevant to today's topic. I'm not going to answer any question that is irrelevant to the topic. Please ask this in Discord. I'm teaching something else and you're asking something else. Please concentrate on what I'm teaching. After this, after the session, you can ask the question. Thank you, Johnny. So yeah, as you say, Sri Lanka's economy, you cannot invest, right? Because there has been a lot of trouble going on. The finance is not going good. The rates are just like all level low. They are completely zero to the US dollar, so they don't have any US dollar to buy anything. With your currency, what else you can do? But if you have US dollars by any chance, at least you can buy and sell things, right? At least you can buy and sell things. So economy, you go with Indian economy, right? Let's then come to sector. Now tell me, for example, this is the Indian economy, and there are some things that, for example, COVID is going on. Tell me which sector will work the best. Tell me, guys, which sector will work as the best. If, for example, this is going on, tell me which sector will work as the best. Healthcare? Pandemic going on? Okay, healthcare. Medical sector. Let's take it as a medical sector. After you have done the sectorial analysis, you come down to an industry analysis. In industry, you learn about which industry is going to boom. So, like for example, medicines, okay, medical medicines, healthcare, jo bhi aap bolo, anything you say. Now here you have to classify it again. How did you classify here it again? Just tell me which industry. Are the insurance, life insurance, health insurance going to be sold more, or the medicines or the hospitals? So you look for the industry specific, right? You look for the industry specific that medicines, pharma is going to go up, hospitals are going to go up, or the hospital industry itself. Which industry specific is it going to boom? Okay. Once you are done with this, once you are done with the industry, then comes company. Then comes company. So, for example, the last pyramid says if you are going for the pharmaceuticals, you have some limited companies, Dr. Reddy, Sun Pharma, XYZ. Then you choose your medicine companies. You are going in the hospitals, okay? So then you choose the hospitals. Which hospital will work as the best? Okay, so this is how the pyramid structure of fundamental analysis is divided. First, you choose the economy: US, India, Asian, Shanghai, Japan, China, XYZ. Then you choose a sector, which sector is going to work: construction sector, pharma sector, steel sector, or any commodity or anything. Then you choose the industry that is going to work, and after the industry, you choose the company that is going to work. This is how you divide your complete long term, okay, fundamental analysis. After that is done, you come to a thing that what to buy exactly. You would also be confused with Reliance and at the same time penny stocks. What would just go up like very easy? Penny stocks or Reliance? Tell me, guys. Tell me in the chats what would be very easy to go up? Penny stocks or Reliance? Let's check it out. Okay, this is a whiteboard I'm opening. Let's see with a simple example, guys. Let's see with a simple example. Reliance net worth. Let's check in the Google Reliance का valuation. Tell me, Reliance that is valued at 16.39 lakh crore, okay, or a penny stock, or a penny stock that is valued at, now tell me, what is easy to grow? Which company will go up like ease? Reliance, which is valued at 16.39 lakh crores, or penny stock, which is valued at 2 crores. Tell me, guys, which one would be a very easy way to go up? Obviously, baat hai, penny stock, right? That's why you see that penny stocks just go up like this. But when it comes to Reliance, Reliance is very stable, right? Now tell me which one will double fast? 2 crore one or the 16 crore 39 16.39 lakh crores? Tell me which will double first. The question is which stock will double first? Reliance or Penny? The 2 crores one, right? Because it is very easy to double a penny stock, but when it comes to the numbers like 16.39 lakh crores, it is very hard because if this Reliance stock gets doubled, your GDP will have a major increase, right? So, what I'm trying to tell you or teach you here is market cap matters. Market cap is market capitalization, refers to the total value of all company shares of a stock. So, for example, Reliance has how many shares? 676.4 crore shares. Reliance has 676.4 crore shares, and a share is priced at 2359 rupees. So, what you can do is simple, multiply the shares with the total value, and you get a total value in terms of market capital. Easy, everyone? Easy? Tell me, is it clear? Please repeat in short way. In very short way, if there are, for example, I'll explain the example again. Let me know, let me know, a company has 100 shares, okay, and value per share is 1 rupees. The company has 100 shares, a value per share is 1 rupees. Tell me the total market cap. A company has 100 shares, okay, and 1 rupees is the share price. Now tell me market cap. 100, right? So it is very easy. If you want to check what is the market cap, what you can do is check out the total number of shares in a company. After you know that this is XYZ, total number of shares in a company, okay, and then it is 1 per share, it comes to be the market cap. Easy, everyone? Easy? Clear, everyone? Similarly, let's come to fundamental analysis. Fundamental analysis first comes as beta, second comes as EPS. Beta is a measure of stock's volatility, okay, and volatile, you can just say, and the overall market in relation to the overall market. So, for example, if the beta value is 1.0, okay, it is okay. Someone is asking a doubt, I think so. Please repeat in short way. Okay, I've cleared it. So yeah, let's come to beta. Beta is measure of stock's volatility in relation to the overall market. By definition, the market, such as for example Dow Jones S&P 100 index, has a beta of 1.0, and the individual stocks are ranked according to how much they deviate. So, for example, a stock swings more than market, which has a beta of 1.0, it is okay. Okay, but for example, if ठीक the beta is somewhere around 5.0, then the stock is specifically not a good one because it is more volatile. Clear, everyone? Is there any doubt with the beta? Let me know. It's a very simple topic. So basically, if again you have a doubt, beta is nothing but a numeric value. It is just a number, nothing else. So जो भी fluctuations, the fluctuations in a stock changes is denoted by beta. And beta greater than 1 is like more volatile. Simple. Yeah, then stock would not be even moving, Shashank. So in very, just give me 1 second, guys. Okay, am I audible? Okay, okay, let's go. So again, beta, I think it's very clear now. It's just the stock fluctuations, okay? And in just number, if I give you a numerical value, it is very easy, nothing a lot to know. If any stock has a beta 1.0 or less, it's good. But if the beta increases like hell, you just increase the number, the stock is compared to be more volatile. More fluctuations can be observed. Now come to EPS. EPS is earnings per share. EPS is a compulsory, not compulsory, it's a company's net profit divided by the number of common shares. So, for example, the common shares are 100 and company's net profit is 100, then the EPS comes out to be 1. EPS is something that it a corporate value that just that tells you a corporate value. Clear, everyone? What is meant by volatile is a question asked by Kiran. So, volatile is nothing but the fluctuations in overall market. So, a fluctuation can be like this, and even something like can be like this. So, if I just draw in a graph, just check this out. These both are the graphs. One is like this, one is like this, which is more in simple way volatile. This one, right? Because this has more fluctuations. So it's normal English, nothing else. I don't know what's very hard to understand in this beta. But earnings per share, EPS is a company's net profit divided by the number of common shares. Very easy, one line answer. What is EPS? Earnings per share is company's net profit divided by number of common shares it has outstanding. So, for example, if a company has 100 shares, common shares, and a net profit is 100 rupees, then it comes out to be 1. And EPS is something that is widely used for estimating company's corporate value. It is just corporate value of a company, nothing else. Let's come to fundamental analysis. What is fundamental analysis? The price to earnings ratio, P ratio, is the ratio of a valuing company that measures the current share price. So it's very easy. Again, what is P? Price to earnings ratio. What is the earning and what is the price? When you divide that, the ratio comes out. So it is price to earnings ratio. Okay. Now, every sector has a different P, every stock. So, for example, Reliance has a PE of 26. And if some stocks that have a P under 30, they are good to buy. But some stock that has a P of 100, they are not good to buy. Okay. So, you always look for the sector P, sectorial P. Uh, so, the P under 30 or 25 is very good to buy. Is very good to buy. Okay, make your own is asking how will we know the correct price and correct time to buy? Okay, I'm teaching now. Please keep patience, guys. Please keep patience. So as I told you, fundamental analysis, there's no something known as PE, price to earnings ratio. What is the price to earning ratio? It is something the investors or the analysts determine the relative value of company shares and they compare it and they get to know that okay, this is the good time to buy or this is a good time to not to buy. So the good PE value is somewhere less than 30. And if you want to check PE of the companies, you can just यहाँ पर write the company name and you can just write stock price, ठीक है, stock value, and you'll get the P ratio or the market cap. Okay, everyone, this is nothing. This is known as a PE. Then comes book value. What is book value? Book value is just the amount of money that would be paid to shareholders if the company was liquidated and paid off all its liabilities. So for example, I liquidate all my liabilities. So the amount paid to the shareholders is known as book value. In easy words, the book value is equals to difference in company's total asset is difference between company's total assets and liabilities. So for example, a company has an asset of 40 crores and a liability of 10 crores. The total comes around to be book value comes around to be 30. The net assets, okay? Net assets basically. Price to book is again price to book ratio, and a price to book ratio is very simple. Any stock is considered undervalued if it has a 1.0 or under the value of 1.0. So for example, a stock has 0.5 ka book value. It is considered to be undervalued. So you can buy that. If the stock is having a price to book ratio of 4.0, then it is overvalued. However, investors consider 3.0 takka stocks. Okay, so you have always to check the book value. It's okay. PB, it should be under 3.0. So till now, what we have learned is very simple. PE should be greater than or equals to 30. Okay, smaller than, sorry, smaller than. So PE under 30, you can just write under 30. Okay, PB, price to book, under 3.0, under 3.0. So P should be under 30 and PB should be under 3.0. Now comes fundamental analysis का face value. What is the face value? Whenever a company is listed in stock market during the IPO, the first price of the company. So for example, a company was listed at 5 rupees. So face value comes around to be 5 rupees. It's known as FCV, face value. So 5 is the face value, the first price of the stock when it was listed in the market. Then comes around the corporate actions. Corporate actions are the events that will bring the changes of the stock. So for example, there are bonus, stock splits, mergers. Two companies are merging. So, you'll have common shares now or bonus. For example, a company wants to give you bonus. Stock splits are there to manage the stock price and make investors invest more money. So for example, stock goes to 1000 rupees and now the company thinks that this is just too much. Investors cannot afford to invest 1000 rupees per share. So what they will do? They will divide it. So for example, Rahul had one share of MRF. Now Rahul will have two of MRF because they divided it. stock split. So Rahul had earlier one. Now Rahul has two, but earlier MRF was valued at 1 lakh. Now it is valued at 50,000. So quantity changes, value remains the same. Quantity changes, value remains the same. So for example, you are having one share of MRF, 1 lakh rupees. Now MRF will plan one ratio 10, which is 10 shares of MRF, and one share will become 10,000 rupees each. Clear, everyone? Please tell me a yes if it is clear. Yeah, it is beneficial for the company anyway because it makes investor invest more money. There's something known as dividend. A dividend is distribution of some company's earning. So, for example, a company earns 10,000 crores of profit, and it thinks, okay, we want more investors in the company, so let's distribute some of the profit to the investors also because they have invested in the company. So they give you 5 rupees, 10 rupees, 15 rupees per share dividend. So they give you dividend. Stock split, I made you clear itself directly. So when the company wants that investors should invest more, so what they do is they just reward you with extra shares, and they divided the company share price. Okay, so like they do it in 10 ratio 1, 5 ratio 2. So like two shares are there, they will give you one extra share for that. Every two shares you get one extra share. They do the stock split like this. And then something is known as rights issue. Rights issues are some extra shares given to your shareholders, and they take advantage of, for example, you can say stock split, dividends. Split share is like bonus share. Yep. Bonus share is different. Bonus you are giving, like, if a company doesn't want to give you a dividend, right? They will just give you a bonus share. If like the price is like that. If not bonus share, then they might give you a stock split. So there is something happening in the companies. Right issues are happening. So for example, 10 shares, someone is having 10 shares. A company makes a announcement that anyone who is having 10 shares are offered two more shares at XYZ discounted price. So if you want to get, so these are the things, right issues. Then comes shareholder patterns where promoters, FIS, there are different people. I'll tell you this, okay? And they have to write all the documents and submit it to SEBI and the brokers. Clear, everyone? Clear till this area? Now let's go and let's learn some technicals. Then we'll see some examples. Yo, okay, let's just go and learn some examples first. So let's learn. First, you have to open a website known as Money Control. First, you have to open a website known as Money Control to analyze your stock. To analyze your stock. My company gives few $1,000s of shares everywhere. So, for example, if any XYZ foreign company is giving you X dollar and shares in dollars, I don't know which broker you're using and which company you are a part of, so I cannot comment on that. Comment on that. But if any Indian company is giving, of course you can contact the broker under your company and you can ask for that. Yeah, Ganesh, your capital remains same. So guys, money control is all about the news, right? Money control is all about the news. First, you have all the news over here. First, you have all the rules, the news over here. And after you have all the news, you see different things over here. See, just give me 1 second. See, I'll just scroll. Can you see this, guys? All the big news, everything is over the money control. So after money control, you can search all your favorite stocks. So I'm not taking an example of LIC, Santu, but I will take instead example of Zomato, that because it is trending in market. So let's see Zomato, guys. It is 12% down this day. It is 12% down today. I have a target of 20. Again, I'm not a SEBI registered advisor, but yep, I'm just expressing my view to some people that yep, I have a target of 20. Again, I'm not SEBI registered. We are currently in the process. Okay. So for example, when you search Zomato over here, you see all the different places. The web pages over here, you can just check it out. Okay. You come down, you come down, you see some ads of free account with 50,000 cashback. Oh my God, oh my God. Then you just come down, you see overview, chart, MC insights, MC technicals, everything is there. You don't have to watch all of this. You just have to come down, 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 and you see something like this, financials. You see something known as financials. Now, this is where everything goes. This is where everything goes. So what you can do is just go for standalone overview of profit or revenue. So let's just take revenue first. Revenue of, for example, consolidated revenue. Everything is combined, and we are taking annually. Okay, now let's check this revenue. 2018, Zomato had a revenue of 466 crores compared to 2022, where Zomato has a revenue of 4192 crores. 4192 crores. But let's see the net profit. Net profit never was increasing. From 106 crores loss in 2018 to 10x the loss in 2019 to still making 122 crores, matlab somewhere around 1200 crores loss in 2022. It's always a loss making company. Loss making companies never survive in the market. Okay. One day you will be out of your money, right? Then comes EPS, BVPS, ROE, return on equity. So if you can see, return on equity is just decreasing. Earnings per share, EPS, debt to equity, debt to equity. Okay. So these are the basic things. And income statement, you'll see sales, other income, total expenditure, interest, net profit. You can see the holdings over here. Public has 85% of Zomato. Then others have only 2.81%. FIIs have 10% and DIIs have 2%. Okay, so these are the holdings. Then you can even go to balance sheet where you can see the share capital, reserve surplus. You need to be a commerce student to learn everything. But the overall things will go for total assets, total liabilities. Okay, you can just check this out. You can check the cash flow, operating activities, all is red. You can just check it out. Operating activities every year it is just going red. Ratios you can just check. Okay, book value, earnings per share, dividend per share, face value, EPS. And for example, you want to check a beta of Zomato. Beta of Zomato. You can just write over here. See, beta 1.51, 1.5, face value 1, EPS. सब दिखा देगा यहाँ पर. PE is 196, not a buy at all. 196 ka PE. Did you buy it? No. Everything is written over here in this dashboard itself. In the top side, I showed you, and there it was written. See, price to book is 1.96, market cap, 20 days volume, stock PE. Okay, everything is written over here. So once beta, beta over here, 1.57. Everything is written over here. You need to spend time over this panel to learn all the things. Then after this comes a good company. Let's see a company named as Reliance. A company named as Reliance. Let's see this. Reliance Industries is up by 0.05% today. Now let's check if the what the face value is, 10 rupees. Price to book 1.93. Sector P 25. Okay. Book value 1255. Beta 1.11. Okay. Now let's go down and let's see what's happening. Net profit, revenue. Let's talk about revenue. Every year the revenue is increasing. Okay, sir, increasing. 2021 it was less because of Corona, but still 2022 it has a revenue of 7,21,000 crores. It is a lot, right? Let's see. So revenue is okay. Zomato also had the revenue. If the net profit is increasing, yes, net profit is in green, 67,565 crores. And in 2021, it's somewhere around 53,223 crores, where in 2020 it has 39,773 crores, whereas in 2019, just see the value is increasing. Net profit is increasing every year. Earnings per share is increasing every year. Return on equity is increasing every year. Let's see income statement, sales, other income, all are increasing. Net profit increasing every quarter, every year. Balance sheet, let's see all the positive numbers. Nothing is in negative. Okay. Cash flow, investing activities in negative. See, investing, not operating. Net cash flow. This is showing you the yearly wise. So just check this out. So after watching this ratios, after watching every this also, if you watch now overview, you'll get a lot. You'll just get a lot to learn that what's happening. Promoters have 50%, 10% only diluted to the public. Public only has 10%. Then comes FIIs, DIS, foreign institutional investors. By any chance, if you don't know the full forms, these are known as profitable companies. So after watching all of this, you'll understand, okay, sir, this is a profitable company and this XYZ is a loss-making company, right? Clear everyone till now? Any doubt you can just ask? Anyone? Any doubt? Clear everyone? Beta already cleared. Domestic institutional investors, David, DIIs. Foreign and domestic, guys, it's very normal English. Please go through the PDF once again. Told you in the starting itself, the day we started the course. Okay, chalo, let's go with the okay, the fundamentals are clear, sir. Can you tell about some technicals? Okay, chalo, let's open trading view. TR trading view. Okay, let's open this trading view. After you open this trading view, you have the chart. Okay, you have this chart, and after you open this chart, just go to the monthly time frame. Let's go to the monthly time frame. You can search in Google, Santu, or you can ask the company for a 400 pages document where everything is written during the IPO. So open trading view, go to this monthly time frame and just check your stocks. Adani Wilmar Limited always going up, which is very simple. Yup, it has a positive hope of going up. Let's check about Tata Steel, always going up. See, always going up. So yup, this has a positive of going up. But at that time, just consider Zomato always going down. So even if you buy this, it can go down and you can be in loss. Let's talk about JP Power, always going down. So even if you buy this, you can be in loss. So then you have to be very accurate about when you're buying. Just do all your analysis upfront, checking if it's uptrend or if it's a downtrend. Everything. Clear everyone? And then you have indicators. Starting, just go to this indicator section. Okay, daily time frame indicator section. Just write long term. Okay, you have to write long term. And when you go this community script, you'll have this two indicators first long-term levels and second long-term buy sell signal. So when you have this long-term buy sell signal and this, I'll apply both of them. Now check this out. This will give you the levels. Okay? This will give you the levels. What is yearly low, what is weekly high, what is monthly low, the values. So month low is this, year high is this, okay? And if you see year low is this. So for example, whenever it is in yearly low, which is 52 weeks low, you should buy. So whenever it is in yearly low, you can buy. Never buy at the month or year highs, okay? Never buy at the month or year highs. So you can check the levels from this indicator, long-term levels. Now you have buy sell signal by Johnny. So you'll get the signals if you are correct. If you're going to buy, check for the signal. If it is a buy or it is a sell, okay, it will tell you if it is a buy or it is a sell. So these two indicators will help you to basically analyze the technical aspect of long-term cap trading, long-term investing. After these two, we have more of the tools, which are the support resistance line basically, and you can type VWMA, volumetric moving average, and you can even write EMA, exponential moving average. I'll even show you. Okay, so these two are important, and then when you just double click on the EMA, you have to just open the last one, nothing else. And VWMA, when you open, just write the length should be 200. See this now. Let's check out Adani Power. Okay, let's check out Adani Power in daily time frame. See, do you have these lines coming in? So volume weighted moving average says this is the correct zone to buy. So whenever the stock is in 200 EMA or 200 VWMA, it is the correct zone to buy. It is a very safe zone. But when it is very above of the zone, it is a very warning that it can come down to the zone. So this zone is ideally a good point to buy, and you can even check out EMA. So both these lines or between these lines are the good zones to buy, and you can buy accordingly. So EMA or VWMA. And if it is below this, so make sure it just goes above this, takes a bounce, and then goes above. So for example, Bajaj Finance is trading below 200 days volumetric moving average and exponential moving average. Most of the chances are it will just go down once again. Shantu, you can check in the document for that. Thank you. You can check in the document for the price to book, price to equity, everything. It's a 400 pages document. You'll find it somewhere. If you might even not find it, and you can ask the company what's happening. So this is guys basically VWMA or EMA, volume weighted moving average and exponential moving average. These two and the other two indicators will help you in the technical aspect. And always check out the fifth thing, that it is always going up or it is always going down. And after you have checked all these five trading aspects, now that's the time if you check all this EPA, right issue, stock split, dividends, corporate actions, fundamental में face value, book value, PB, PE. Stock market is not that easy as you think, that you come here and you just make 5,000 every day. You have to give your hard work, and this is where the hard work is. Thank you so much for watching today's session. Now we will be learning about investment in the next session. Any doubts? I am open to the doubts. You can ask. Please replay that lucky star. You will get it. Please replay that part. Sheikh, please watch the first session. I have explained how to, first or second or third session, I've explained how to buy or sell a share. I've completely explained it. LIC you can hold for 5 years, you'll be profitable, sir. Again, I'm not a SEBI registered analyst. It's in process. I'm just 19-year-old, currently doing my graduation. I'm in first year of my college. So yes, we are currently learning the stock market and even giving the exam of SEBI. So not a SEBI registered analyst, but again I can say, if I was in your case of LIC, I would have hold it for 5 years. Now, guys, I have taught you so much about the long term analysis. Go try yourself. Once try yourself, okay, and after that, once you have tried, still you didn't get the value or the correct area to buy, you can ask the doubts in Discord. Don't ask for stock specific doubts. Now comes, if you're holding some shares that are in loss like Zomato and Paytm, you have no option but if you have the capacity to hold it till zero. Okay, now you have bought it at 170 and currently it is trading at 140. 40 rupees. It has already lost 70% of its value. You can hold for more 30%. Make your own. I have already given a video on my first quarter profit on my YouTube. You can check it out. Thank you for the class, Lucky Star. Okay, Lucky Star, thank you for the class. Welcome. Now, guys, I've already taught you how to do the long-term analysis. Go and do it on your own and try to figure out what's happening and what would be the good one. Chalo, by closing in today's session, thank you so much for joining. And also, guys, I need a favor from your side because we are also opening the giveaways for the professional course. So this is not the part of the class, but we are launching our professional course where completely advanced courses there of trading and investing and also making more types of income sources, not just stock market. Not just stock market, there are more than 20 types of income sources that I personally follow. So what you can do is, if you want to know more about the income sources, you want to continue your journey after this basic classes also, you can contact us. And I would love if you can give me a review of the today's session. Akash, we will tell. Fearless, we will tell when it's a live session. Guys, I'm sending my Instagram link. I would love to get the review from your side of the class. How was the class? So if you want to say me a thank you for the session, can you please send me over my Instagram so it helps me to get motivated. Thank you for joining the session. I'll see you tomorrow.